So just by means of introduction, I think a big theme we've seen this year and for the past year, I would say since 2020, has been this whole green energy transition story. So where does nickel fit in? Nickel has benefited massively from that. So it's been a massive driver behind the surge in prices since the trough that we saw in March 2020. I think it's important to look at the macro before we touch on the energy transition, because two reasons we saw the price of nickel surge. One, from a macro side, was the weakening dollar. So weakening dollar, our view is that basically going forward, there's a very strong correlation between nickel prices and the dollar, like with any base metals. So basically, what we are looking here is on the right-hand chart, chart number 5, is the forecast that I just took an example of BNEF, but it could have been any other one. Basically, their forecast on electric vehicles came lower, are kind of like lower than what the EU Green Deal is aiming for. And basically, I think last year, a lot of analysts thought that because we were heading towards a financial crisis, that the EU or whatever other country that was trying to cut emissions would kind of loosen its ambitions. So basically, one has to understand that the way nickel fits in is in the battery mechanism. So we're talking here about most batteries being using nickel, the lithium batteries. And although you'll find a lot of NMC batteries, nickel manganese cobalt batteries, which are more predominant, you'll find the N is for nickel, M is for manganese, C is for cobalt. But actually, it's the N part which is the important part, because the nickel gives you a range. Where the big question here is, we're saying, and the market was saying, oh great, there is the green energy revolution, there is the Green Deal in Europe, there is the Biden infrastructure plan, China going for electric vehicles, and oh, by the way, we don't have enough mine sulfide coming out to be able to respond to the demand from just the electric vehicles. That's regardless of, let alone, the battery farms. So the market was very bullish, and I think that was one of the main drivers, not just the macro drivers, which led us to see this massive rebound in the price of nickel, as you can see from this chart in front of you.
So first, let's have a look at the fundamentals, the big picture, before diving into the specific market topics. Looking at the market balance, we see that the nickel market balance turned into a surplus in 2020, following several years of market deficits. On the one hand, the nickel demand has been negatively impacted by the COVID pandemic, especially in alloys and special steel applications. On the other hand, the nickel supply continued to grow, and most of the growth was in the form of NPI. The supply trend of strong NPI growth is continuing into 2021, supported by the ramp up of Indonesian NPI capacities. Outside China and Indonesia, stainless steel production underperformed due to the pandemic, with weak demand across all end-use segments, as well as there were some temporary mill stoppages earlier in the year. In the non-stainless steel sector, the nickel demand saw double-digit declines in 2020 on the back of lower industrial activity. The downturn in oil and gas industry in the context of oil oversupply and low prices had a negative impact on the alloys and special steel consumption. So government support is essential in developing the EV market, and legislation and stimulus are driving electrification in the main regions. In Europe last year, the EU announced new CO2 targets, which would result in hefty fines for car makers in case of non-compliance. An increasing number of gigafactories are already being built or planned for the next years. These developments are actually supported by the EU in the context of the European Green Deal. Looking now at the chemistry's mix in batteries. Last year, a few words about the LFP kind of batteries, which LFP stands for lithium iron phosphate. So they don't contain nickel, and basically they are a cheaper alternative to nickel-containing NCM batteries. Well, firstly, there are the nickel exchange stocks. For the past year, we saw volumes of nickel coming back to the LME and SHFE and around 80 kilotons of nickel. Today, the stock levels stand at around 270 kilotons, similar to the levels of 2018. While this accumulated metal provides a buffer for the market, including to the batteries, to the batteries industry, since metal can be dissolved into nickel sulfate, which is then used in precursors for batteries. It should be noted nonetheless that the nickel metal in exchange stocks tends to lack consistency in quality, and a premium over the LME has to be paid in order to secure a certain brand at a particular location. In a nutshell, to summarize what I talked about earlier, on the demand side of nickel, the demand stagnated in 2020 due to the COVID pandemic, and is expected to grow in 2021, driven mainly by the batteries and the stainless steel sectors. Nickel supply has been growing, driven by Indonesian MPI, and this resulted actually in the market surplus that we have today.
Start by thanking the MMSteelClub for the opportunity to speak today. And after a view, or two good views actually, of market fundamentals, I'd like to speak to you today about something a bit different. It's a characteristic that stands out for me about, especially around nickel, and it's price volatility. Its impact is felt by miners, smelters, processors, and end users alike, and it can make predictable financial performance really unattainable without management. So what we see here is a series of charts that show prices, and that top left chart is showing nickel, copper, zinc, and aluminum prices, and the one that clearly stands out is that nickel price. And you can really see over the course of the last 10 years the price volatility within nickel. What makes nickel prices so volatile? Well, I remember my first contact directly with the nickel market when, as a copper, lead, and zinc manager, price risk manager, I was asked to temporarily cover my company's nickel hedge book for a couple of days. And on my first attempt to lock in a commitment, within a bat of an eye, the price had shot up $300 per ton, well beyond the $100 discretion I was given. It was really sobering and scary when you come into it from different markets, because those markets don't tend to move this kind of range quite so quickly. Talk about, on top of the battery story, we've got commodity super cycle predictions. And in the past, these super cycles certainly have left the nickel market in deficit. When we look at industry price risk, notably, it's the aluminum business that actually, even though it's the least volatile, is the business that is best controlled and has actually developed the most advanced methods of price risk. This is what my team does. We work to help businesses learn to manage this and put in the processes and the frameworks that our companies need if they don't understand how to get at it, and even improve them if they do.